display. Everything's looking good. AES. Mark, I don't have no idea what AES is either. AES. All right, so we got enough to get ourselves started. XDTE. Prince, really? XDTE? XDTE. All right, Prince, don't go anywhere. Okay? We'll be here in a second. QBTS. Uh-oh. Thoughts on M this week. Macy's. And what is that one? QBTS. QBTS. All right. I think we got everything running. Up, 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 and all good to go. All righty. Let's see what we got. All right. So, first and foremost, my name is James. Good evening, everyone. This is Dividend Stock Talk, brought to you by The 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Let me explain briefly what I am looking for, so you guys won't be embarrassed by me calling you out by offering me something that just doesn't work. Okay, what I am looking for specifically are dividend stock companies that have a bare minimum of 2 decades of profitability. Not talking about dividend stocks. But do you like Google? No, I do not like Google. They do not have dividends. Can you look up Microsoft? MSFT. MSFT. Wait a second. Let me take that back. Google does have dividends, but I think that's only like 1 year. 1 year of the dividends. That's all Google has. So, no to Google. All right? U.S. Steel. Love U.S. Steel, Pup Dad. We'll take a look at that one. I think I let my U.S. Steel go last week. But we'll take a look at it. All right. That being said, dividend stocks specifically. User 41473750411666. Well, yeah, right. SCHD. You're new here, okay? Also curious about SCHD. So you're new here. So let me briefly explain what I'm looking for, because I don't think you heard me the first time. I'm only looking for dividend stock companies that have consistently increased their profitability for at least 2 decades. That's 20 years. SCHD does not fit. Okay, there's a lot of ones that do not fit. XDTE, that does not fit. Okay, 2 years. Sorry, wait a minute. 2 decades. Sorry, 2 decades. INTU, really? INTU. Your iPhone is not activated. Yeah, no kidding, it's not activated. All right, so let me briefly explain where this all came about. In I'm at a loss. I'm a little bit flustered. Just getting back to it. I had a nice weekend. Okay, my grandson was over. We had some fun. Now it's back to work, so let's see if I can get back on the ball. All right. Big Boss Tim donated $19.99. Okay, thank you, Big Boss. I have no idea what that means, but okay. Anthony, Mickey D's, MCD. All right, hold on. All right, first and foremost, in 2008, my 9-year-old daughter jumps on my lap and said, "Daddy, what are you doing?" Well, she said, "Daddy, can you teach me?" All right, so here's the challenge. How do I teach a 9-year-old to invest in dividend stocks when most adults don't understand it? So I had came up with 5 criteria for my 9-year-old little girl. It had to be simple. It had to be safe. Had to be predictable, consistent, and no way for her to lose. So that being said, I came up with 5 rules. 5 rules are simple. Number 1, never buy something you don't want to hold on to for the rest of your life. If it's not good enough to hold on to, then don't buy it. If you don't understand it, don't buy it. If you think it might go down or you think it might do whatever you don't want it to do, don't buy it. It's a simple rule. If you don't like it, you don't understand it, you're not willing to hold on to it, don't buy it. That's rule number 1. Rule number 2, never sell at a loss. It defeats the whole program. Rule number 3, make sure the company is consistently profitable. That means, for me, 2 decades of profitability. That's 20 years of profitability. 20. Rule 4, weekly options only. Okay, if it doesn't have weekly options, it's an automatic no. And rule number 5, make sure all the numbers work. Now, we are going to do a few trades. Okay, also, we decided this week we're going to do a few trades and we're going to make a running count of them. So tonight we're going to take a look at a few and I'm going to write them down and see how they progress. Drazik, what's happening? We'll see how they progress throughout the week. So user 4147376041166555, whatever. I'm going to call you Peter. Peter, you want to know what my annual return is? It's better than yours more than likely, and it's consistent. What's up? Good looking. Okay, thank you. Anthony, I think MCD hits all those rules. Absolutely does. And they are a weekly. Absolutely. You think that's funny? I average, on average, over 1.5% per week. Okay, you do the math yourself. 1.5% every single week. Well, that comes to more than 50, 60% per year. Not many people get that consistently year after year after year after year. Big increase, rising prices with them. Okay, not quite sure what that means, but alrighty. Oh, where was I? DVN, got that one, and NYVD, yep, got that one, got that one, got that one. US Steel, going to get that one. Haphazard, good evening. Iced coffee. Do you know what's happening in Air Canada stocks? Nope, I don't do Canadian stocks, sorry. Mara, we'll write that one down. M-A-R-A, alrighty. Studio, my name is Ari, and I need you to be my voice actor for my new TV series, Annabelle Comes Home. I'm 16 years old. Well, unfortunately there, my dear, as awkward as this may sound, you being under the age of adulthood, I'm not really allowed to talk to you, so I don't think I'm going to. So Coco, yeah, Mara does not have dividends. I get that. Anthony, Pepsi, another dividend king. Yes, it is. EPD, and Pepsi. We'll take a look at those. You're not beating Buffett, buddy. Well, I'm terribly sorry, but I'm pretty sure Warren Buffett does not get over 50% every single year. You want to challenge me on that? Bring it on. You better bring something more than your ego, though. All right, starting out for dividend stocks, recommendations, cool beans. My recommendations are dividend kings, dividend aristocrats, dividend champions, dividend contenders. I promise you that. Oh my goodness, I love naysayers. I do. But here's the funny thing, Mr. Naysayer. I at least have my name available so people know who I am. You're signing in anonymously. I have no idea who the hell you are. But that's the way you want to be. Let's be that way. Okay, why didn't that just open up? That should have opened up. Well, now that's awkward. Now that's awkward too. So what the hell's going on there?
Well, if you do that, can you answer a question?
Sure, go ahead.
You say 20 years of profitability. So do you get that just from the options? I'm sorry, from the stocks being dividend kings, dividend aristocrats, or are there specific metrics that you look at to determine that they've been profitable for the last 20 years?
It's an excellent question. Here's the thing. In order to be a dividend king, you have to have 5 decades, that's 50 years, of increased dividends to your shareholders. Now, if a dividend is a portion of the profits the company gives back to the corporation, well, how can you possibly increase the dividend without being consistently profitable? I mean, think about it. It kind of makes sense. You can't give out more money unless you have more money coming in. So if they're consistently profitable, they increase their dividends. So 5 decades of increased dividends, 5 decades of increased profits, just to be a dividend king. Now, a dividend champion and a dividend aristocrats, it's 25 years of increased profitability. Now the dividend contenders, now this is not good. Why is this thing not working right? Now that one's working. Let's do this one right here. All right, let's try this. All righty. All right, that's working. Here we go. So check this out right here. Now, where did he go? Okay, so user 41473750416666. All right, you don't get 50% per year. Now, let me think for a second. Show your 10-year performance. Now, see, it's interesting. It's interesting for someone who doesn't sign up under his real name to ask me to show him something that he doesn't believe. Okay, so let's see how good you are with your math. Okay? Now, I'm not quite sure if you can see this well or not, but here are my trades. Okay? This was, hold on a second, week 21 for 2025, May 19th through May 23rd. Okay, 9 stocks. Started out with, you ready for this? Okay. I started out with 187,000. Okay. Each one of these trades here comes up with a profit of 7,134. So you're right. I didn't make 1.5%. This week I made 3.8%, which is a hell of a lot more than 1.5%. So let's take a look at some of these trades. Hertz. $9 per contract plus 10 contracts, that's $90. 2 contracts, 76, that's 150. 18 contracts at $84 a piece, that's over $900. 10 contracts at 450, that's $450. Oh, 40 contracts at 45, that's over $1,600. 2 contracts at 110, that's $210. 1 contract 84, that's $84. 1 contract 144, that's $144. 11 contracts at 45, what is that, 500 and something? 12 contracts at 105, that right there is over $1,200. 6 at 1, that's over $600. 3 at 48, that's 144, something like that. 148, 148. 148, 1 at 15. Yeah, you add that all up together, it comes to over $7,000. Now, $7,000 return. Okay. $7,134 just for these trades right here, with an investment of $186 comes to 3.82%. That's just for last week. Now, every single week, you can go through each and every one. 3.8%. 4.2. Oh, 0.65. Ooh, look at this one. I didn't make 1% that week, but I did make $1,100. 1.4, 1.8, 2.7, 3.1, 2.1. Look, where are we now? March 10th to the 14th, 2.2. March 3rd to the 7th, 1.9. The February 24th to 28th, 3.75, 2.5, 3.1, 3.7, 3.5. So do me a favor. Next time you want to insult me, come to me with a little bit more than, oh, you can't do that kind of crap. I don't like people like you. You just aggravate me because you think you're right. Now, why isn't this working? Can't reach that page. Fine. AT&T. Let's go to this page. Lovely. So let's get out of that one. Lovely. Out of that one. All right. Don't need that. All right. So let's go back to AT&T. There we go. Let's leave it there. What else are we doing right here? Here we go. And
So James, I just want to make sure that you had answered the question regarding the profitability, 20 years of profitability.
yeah.
And that the answer is because you're choosing high quality stocks from Dividend King and Dividend Aristocrats, the 2 other ones that have proven themselves to increase their own profitability.
Correct.
Okay, beautiful. Thank you. Thank you.
That was that
They're
was easy enough, wasn't it?
gonna hate and they're gonna be broke. Just ignore them because we're making the money. They're stupid. We're making the money, bro. I love it.
Yes, I know. I always like it when people think they know more than they really do. And then they question us that actually are doing it consistently. It's a little frustrating. You know what? I love haters. If you don't have enough haters, I'm not doing something right. So bring on the hate. So just to let you know, yeah. Okay, Funky Cold. My favorite live streamer. Too many people looking for a quick, get rich quick. You're right. 1.5 is realistic, okay? Kroger. Ooh, I like Kroger. Let's put Kroger down. All right, I got to mute you over here only because of the feedback. Who do we have with all that feedback? Uh-oh. I got someone who's got some feedback. All right. Who is it? There it is, iPad. That was it. All righty. All right. Where are we? Let's go for a couple more questions. We're going to do Procter & Gamble. We'll look at that one. Procter & Gamble. Macy's, we have that written down. Haphazard. Prince. Thank you, Prince. Money 247. Gotta love it. What's your thoughts on biotech stocks? Okay, Samson, you're relatively new here. Okay, I don't separate my stocks by industries. Okay, I only look at consistency of profitability and when do they pay their dividends. That's basically it. Okay. Oh, new to the chat. Good evening, good evening. Hey, Becca. How are you doing today, Becca? Okay, Caprizion. SBLOC, never heard of it. Okay, Jessica, good evening. Kevin, good evening. You don't know what SBLOC is? No. Why should I? Let's take a look. Let's see what I am missing out on in life, because apparently SBLOC is going to change my life. Dude, it doesn't even show up. Okay, SBLOC doesn't even show up. So how can I possibly be missing anything if what you're asking me to look at doesn't exist? Sorry. Am I ready for tomorrow? Would you consider REITs a bad investment? I don't consider anything a bad investment. Everything always comes down to what is right for you as opposed to what is right for me. Now, there aren't very many REITs I actually invest in. Now, I do invest in a couple of them because they make sense and the numbers look good. Other than that, most of them I don't. Because I'm strictly by the numbers. If I can buy something, make a profit within 5 to 7 days, fine, I'll do it. If not, no thank you. Did DFS go to no options? I don't know. Let's check it out. DFS. Isn't that Discover Channel? Discover? It has no options. So we're going to take DFS off the list. 3A Ghost, CMCT. What the heck is that, CMCT? Creative Media. Come on, dude. You've been here long enough. Don't do that. Wow, you're incredible. I hope I learned from you. Okay, Mark, just sit, chill, hang out. HS, am I ready for tomorrow? No. Under contrary belief, okay? You think I'm on my computer all week long, a weekend long? No. I just turned my computer on 15 minutes ago. It's been off all weekend. I sign off on Friday afternoon. I don't turn my computer on until Sunday night. Yeah, so I'm not on it as much as you guys think I am. MHODS, TGT, TGT. We'll take a look at that one. Riley, gotta love Riley. I have some of that. AGNC. Nordstrom's, hold on. JWN, Nordstrom's, cool beans. OKTA, I know that one's a no. OKTA, so why am I writing? I write it down because you guys ask me to and I take a look. Okay, Vegas property. So, no industry. As industry is correlated very heavily, if you inadvertently end up in one industry, you may have a very limited diversification and high risk. Okay, I'm going to agree with you because It's not what I do, but all right. Anthony, Google it. A securities-based line of credit. Securities-based line of credit. Oh, it's not a ticker symbol. Why are you saying SBLOC? Securities-backed line of credit. Interesting. Yeah, someone told me about that a while ago. See, here's the funny thing about it. When you take your securities, now I'm not 100% certain on this, but usually when you use your stocks and use them for collateral, you can't write covered calls on them. So what would be the purpose of putting my stocks on collateral? For me, no, I wouldn't do it. Bitcoin better than gold, yes or no? No. Gold has been around for generations, decades. Bitcoin is relatively new. This is just my opinion, okay? Now, gold, you can't really send gold electronically. Bitcoin, you can. Okay, now, Bitcoin, well, you can exchange value here, there, anywhere in the world, as long as you have an electronic device to connect you to the internet. Okay, gold, you can't. Gold, you actually have to physically bring it to someone. Yeah, so they each have their pros and they each have their cons. I don't do either one, but okay. Old Dog, Hewlett Packard, HPQ. All right, let's see what we got over here. Kroger, thank you. Lady Foss, good evening. Joker. All right, wait a second. Joker had a question. Thank you, Joker. And a new TV. You need a new computer. Yes, I do. And a new TV, probably. Anyone could make a fake spreadsheet. Yes, absolutely. All righty. Now, I'm not quite sure if this is fake or not. But those are all the positions that I have. All my profits, losses, blah, blah, blah. And that one. I have 7 different accounts. I only share 3 of them publicly. And I really don't care whether or not you believe me or not, because I'm not here to convince you. I'm not here to convince anyone of anything. Okay, CMCT is going to be a no. Okay, think about it this way. CMCT was over $700 a couple of months ago. Now it's down to $7. Why would I want to invest in that? Okay, yeah. What is that one? Tim Bex, we're going to look at that very soon. Alex, WIF, never heard of it. ONDO, never heard of it. ICP, never heard of it. Now, when I'm saying I'm looking at pre-qualified dividend stocks, okay, let me briefly tell you the ones that I'm looking for. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. The reason why I'm looking at these 5 lists, because all of these companies on this list have been consistently profitable for more than 2 decades. Mark, I have 50 grand to invest. How many different dividend stocks would you recommend? Now, see, Mark, I don't make recommendations. However, if I had 50 grand, I would do 5 to 7. That's me. Now, I can't tell you what to do because I know nothing at all about you. I always tell people, if you want to have a conversation, pick up the phone, drop me your number, and I'll give you a call. Text me your number, or DM me your number, and I'll call you, and we can have a nice chat. Okay, same thing go with you, user 414737. You don't believe me? Drop me your number, I'll give you a call, and you can tell me, on the phone that I'm wrong. I got no problem whatsoever. Laurie, good evening. Kroger, grocery store symbol. Oh, by the way, who is that? 414737. Okay, so you're on TikTok. On TikTok, top left is the link to my bio. Link to my bio will go to my YouTube channel. Okay? Go there, you will see videos of me doing the exact same thing all the way back to 2011. 2011, saying the exact same things that I'm saying tonight. You're new here, so you believe what you want to believe. I'm not here to convince anyone of anything, and I'm not here to sell anyone of anything. If you can't come with an open mind, you don't need to be here. Why do you want to join a live for someone smarter than you to try to call him out? Any thoughts on OQTA? OKTA. Well, let's put it here. OKTA. Okay? OKTA. Interesting. Well, why is I never heard of it? Well, let's find out why I've never heard of it. OKTA. Now remember, I want 20 years of profitability. Okay? And dividends. The name of the show is Dividend Investing for Weekly Cash Flow. So why would you give me a stock, OKTA, that has no dividends? See, dividend forward and yield, nothing. EX dividend date, nothing. That means this company has no dividends. That's why I've never heard of it. Okay, if it doesn't fit, why would I know about it? Now, every week I take a look. As a matter of fact, we got to look today, how many different companies are out there? Well, last week there was 10,046, I believe. So let's take a look again. Okay, we're going to take a look and find out exactly how many how many stocks are out there that we can invest in. Okay, nice guy. We're going to take a look at Walmart. Hold on. All right, we went down a little bit. So this week, 10,037. All right, so last week it was 10,046. Well, this week it's 10,037. Okay, 10,037 different companies. No possible way I need to know all of them. And if they don't have dividends, Alex, if they don't have dividends and they don't have weekly options, they're going to automatically be a no. So let's go and check and see. Okay, WIF, never heard of it. Okay, can't find that symbol. See that? We can't find that symbol, WIF. Can't find it, doesn't exist here in the U.S. ONDO. ONDO. Can't find that symbol either. Okay, these probably aren't even U.S. companies. ICP. Okay, ICP has no options. That's an automatic no. Calvin Hill. Why, thank you, Calvin Hill. Mark, if you want chat, send me your number, Mark. Okay. Uh-oh. What do we have here? Okay, Bitcoin, no. Don't. Ooh, Altria. I love Altria. M-O. Take a look at Altria. Now, I'm going to say no to Altria this week. Reason, check this out. Here's your bottom. Jumps up, pulls back, jumps up again. I don't buy at the high. You make most of your money in the stock market buying low, selling high. Not buying high, waiting for it to go higher. So Altria is going to be a no for this week. Now, that's just for this week. I love Altria. I really do. It's a great company. DFS got bought by Capital One. Cool. I'm still looking at Drapes. Uh-oh. Sorry about that. Is that better? Switch the camera. Well, the camera's a little fuzzy. It's not working quite right. QBTS. What the heck is QBTS? QBTS. QBTS. Dave Watts Quantums. Yeah. No. See, this thing was like less than $1 a couple of months ago. Now it's up over 20. Yeah, no. No possible way this thing has 20 years of increased profits. Not at $1. Say that's QBTS. SPLV. What the hell is SPLV? Sometimes I swear you guys just don't listen. SPLV. Yeah, no. Okay, OQTA, already did that one, already did that one, already did that one, already did that one, already did that one. Okay, cool. Alrighty. Now, Blue Pearls. Okay? I only like companies that are consistently profitable and have weekly options. QBTS isn't there. QBTS. Okay? That ain't happening. There's no possible way you can tell me this has 20 years of increased dividends when a couple of months ago it was at $1. $1. Yeah, no, that ain't happening. Next. Okay, so I'm caught up with the questions. Almost. What do we have here? Am I a day trader? No, I am not. Physical Gold Trust, SPLV. SPLV. No. Okay, you weren't listening either. I said weekly options only. That's not a weekly option. That's a monthly. Kyle, ExxonMobil. Lucid. Lucid. LCID. Lucid's at $2. Hold that thought for a second. Let's get out of that. Let's get out of that. LCID. LCID. Now, I don't mind when you guys throw stuff out. But check it out. Lucid, LCID. No dividends at all. No. Sorry. Dividend stocks only. Kiki. Rule number 1. I got 5 rules, Kiki. Rule number 1 is never buy something you don't understand. Okay? If you understand Lucid, then you know Lucid does not have any dividends. Okay, the name of the show is Dividend Investing for Weekly Cash Flow. Lucid has no dividends. No dividends. No, thank you. Simple, right? Kyle, ExxonMobil, XOM. XOM. Love ExxonMobil. Ooh, check a look at that. Now, what I'm looking for, I'm always looking for the exact same thing every time I look at a stock. I'm looking for 5 things on the chart. Ready? Here we go. 5 things. It should take 3 to 4 seconds. The high, the low, where was it? Where is it? Look at the motion. Up, down, up, down, up, down. All right, it's in a downturn at the moment. Let's zoom in a little tighter. Is it really a downturn? Yes, it is. Look at this. Here's your high here, 111. Down here at 101. It's a $10 drop, which is right around 10%. But Friday, new bottom. What does that mean? Well, basically it means we don't know if it's going lower or not. Okay? Now, a couple of weeks ago, here's the bottom. See, it came down, hit a bottom, turned around, went back up. Well, now it's coming down. What are we waiting for? We're waiting for it to turn around and go back up again. So I'm writing ExxonMobil down for this week so we can keep our eye on it. Because as soon as she turns around, it might be a good idea to jump in. Chris wants to take a look at U.S. Steel. Wow, nice jump. Take a look at that. I'm going to say no to it right off the bat. Remember I said anytime you look at a chart, 3 to 4 seconds should be all the amount of time you need. You're looking for 5 things. The high, the low, where was it, where is it, what's the direction? Sideways, rocket ship. I don't buy anything at the high. That's me. Now, if you guys want to buy something at the high, be my guest. It's not something that I want to do. LW. What the heck is LW? It's a no is what it is. Okay, Lemon, you weren't paying attention. When I said weekly options only, 20 June, 18 July, 19 September, 17 October, that's monthly. That is a hell no. Sorry, dude. David, how you doing? Thank you, David. OG. Ah, yeah, gotta love it. All right, X, got that one. Riley and Riot. Scott, hold that thought. I like Riley and I like Riot. Kiki, thank you for that. Even though I said no to your stock, you still sending me a rose. That's very nice of you. All right, just sit tight for a second. What do I have here? Moo Cow. All right. Do you think I can get in again on RKLB? Rocket Labs at 23? I don't do Rocket Labs. Sorry. It's me, Dan. You're not helping people. I'm not here to help people, Dan. I'm creating a video documentary for my children and my grandchildren. Now my grandson's 5 years old. He's probably not going to watch this video for another 10, 15 years. So thank you for the insult. Keep them coming. You can do better than that though, Dan. Come on. Don't. Thoughts on JetBlue? JetBlue hasn't been profitable for 20 years. It's going to be a no. Moo Cow, RKLB, no. I thought this was selling options and puts. It is. On pre-qualified dividend stocks. See, you got half the equation right. I do options and stocks. Only on companies that are consistently profitable for 2 decades. It's me, Dan. In 10 to 15 years, he will know. Yeah, probably. Can you chart Bitcoin? Yes, but why would I? I don't do Bitcoin because it's not consistently profitable. Okay, now, you may think Bitcoin is the greatest thing. Wonderful. It has a future. It really does. But not for me. There's no possible way to trade Bitcoin. Yeah. There's no possible way I could trade Bitcoin consistently every single week and make a profit in less than 10 minutes a day without having to stare at this thing all day. Yeah, no thank you. Okay, there's no options available in Bitcoin. So there's no way that I can buy a piece of Bitcoin, sell somebody an option in order to be able to get my cash flow. Yes, there is. It's called ETFs. Yes, I'm well aware they have ETFs. And how old are these ETFs? Are they 20 years old with 20 years of consistent profitability? No, they are not. Mr. Nice Guy, University of New Hampshire, United Health. I don't know why people like this thing. It was $600 a couple of weeks ago, dropped down to $250, which is more than a 50% drop. Now she's going sideways at $300. What are you looking to do with it? I don't do stocks over 250. Too far of a drop. Kiki, Meta has dividends. You're absolutely right. Meta does have dividends. META. All right, so let's go take a look at the historical performance, okay? Right down here, historical data, Kiki. And we're going to look at all the dividends that Meta has paid out. You ready? Okay. So, right here it says historical prices. So I'm going to click on that. And I want to look at dividends only. All right, Kiki, ready for this? Dividends only. All right. Okay, so I stand corrected. Meta has 5 dividends. February 2024, June 2024, September 2024, December 2024, and March 2025. That's 5 dividends. You have another 18 3/4 years to go before I'll even consider Meta. Unless, of course, Warren Buffett jumps in and buys it. Okay, Kiki? Mr. Nice Guy, Ford. Ford, here we go. Check it out. The high, the low, where was it? Where is it? Look at the motion. Up, down, sideways, big drop. Here we are right here, 1038. The 1050s are going for 11. Now, 11 is more than 1% of the purchase price. Well, I'm okay with that because that's what I'm looking for. I'm looking for a good, solid company. Ford has been around for over 100 years. So, if I buy Ford at 1038, I sell somebody the rights to buy it from me at 1050. I make 11 cents per share. Now, 11 cents per share on a $10 stock is over 1%. And it's Ford. It's not a company I've never heard of. Okay, so let's take a look. The last 90 days, which is the last 3 months. Okay? Up, down, up, down, up. So here it is turning right now. Hasn't quite turned all the way, but it's getting ready to turn. Okay, here's the top, here's the bottom, here's where it was, here's where it is. Look at the motion. Up, down, up, down, up. It's nice. Look at the last 30 days. Last 30 days, right there. Here's your last 30 days. 30-day bottom, 30-day top. It came back down here. Now it's turning around. We have 1 day to the upside. That was Friday. So if tomorrow's an up day, that's 2 days to the upside. Well, I like 2 days to the upside. I'm going to write Ford down. All right. I like Ford. Let's see what one would look like. Now, remember I told you I'm going to do some sample trades. So let's do a sample trade with Ford right here, right now, at 1050 for this week. Here we go. 1 contract, which is 100 shares right there. At the market, there we go. And confirm and send. Here's Johnny. Buy 1 covered call of Ford 100. That's the weeklies. 6th June 25. That means this option is going to expire this coming Friday. The $10.50 option against the stock at the market to open. Maximum profit, 25 bucks. Well, that's not a whole hell of a lot, but let's do the math. Because math doesn't lie, okay? Let's do the math. If the maximum profit on this trade is $25.50. Oh, what is it costing me? Well, it's costing me, cost of trade, including commissions and fees, $1,025. Okay, well, let's do the calculations. For that, we need our trusty old calculator. Okay, $25.50 is the profit. Okay, maximum profit, $25.50. What does it cost? $1,025. So let's divide it by $1,025 gives me a grand total of 2.48. Well, how the hell can you go wrong at 2.48 for the week? And that's Ford. So you got a couple of questions to ask yourself. Question number one, does it make sense? That's the first question. Always ask yourself, does it make sense? I could be blowing smoke for all you know. Okay? Hardly any of you guys actually know me. Now, some of you I've actually talked to personally. Because when I say drop your phone number, I will give you a call. Some people do drop their phone numbers, and I do give them a call. So, for those of you who I haven't talked to yet, does it make sense? Well, number one, it's Ford Motor Company. They've been incorporated since the early 1900s. Okay? Mr. Nice Guy, you should have bought more than one Ford contract. Okay, Mr. Nice Guy, I'm not buying anything. I'm just showing you. So, out of curiosity, Mr. Nice Guy, let's do this. He thinks we should buy more than one contract. Well, let's see what happens. Let's get out of that. And let's go to 50 contracts. You ready, Mr. Nice Guy? 50 contracts. Okay, confirm and send. Here it is. Buy 50 contracts of Ford, 6 June 25. The 1050 call option on Ford. Here's the maximum profit, $1,275. How much is it costing? $51,000. So let's do the math. You ready? We're going to do the math. Now remember, one contract is going to give you 2.48%. So let's see what 50 contracts is going to give you. Clear that. Profit is $1,275. What is it costing me? It's costing me $51,258. Well, how much money did I make there? Oh, look at that. 2.48%. The amount of shares you buy, the amount of contracts you do, have nothing at all to do with your rate of return. Okay, whether I get one contract and make 2.48%, or whether I get 50 contracts and get 2.48%. I use percentages because they're easy to work with. Okay, 1% is 1%. So 1% of 1,000 is 100. 1% of 100,000 is 1,000. It doesn't matter how much you have. If you can get 1% every single week, by the end of the year, you've increased your portfolio by 50% at 1% per week. Now, if you compound it, it's like 64%. But Mr. Nice Guy, you see that? The difference between one contract and 50 contracts, there is no difference. It's same rate of return. Okay? Apple has a small dividend. Okay, Lou, I'm not looking to get the dividend, Lou. Okay? What I'm looking to collect, Lou, is the premium on the option sales contract. Let me show you Apple for a second if you think Apple's not very good. I got to write Ford down, 2.48. 2.48. That's a good one. We're going to do that one. All right, 2.48. So I'm going to get a big poster board, put it right up here, and write Ford 2.48 for this week. So every time we find a good one, I'm going to write it down so you guys see what we're looking at this week. All right, so that's Ford. Let's do Apple because apparently somebody thinks Apple dividends are too small. AAPL. Apple. Here we go. Check it out. 3 to 4 seconds. 3 to 4 seconds. You ready? High, low, was, is, up, down, down. That was easy. 3 to 4 seconds. Well, it's not at the high. It's not at the low. It's somewhere in between. Great. So now we go over to the numbers. What am I buying it for? $199. The closest strike price is going to be the 200. I got to change this so we can actually see what the 200 is. And the 200 is 3.6%. Sorry, $3.60. So, who said the Apple's wrong? Okay, Lou. Lou, you think Apple's not good. Okay, so let's take a look. A year ago, Apple's at 193. The high of the year is 260. The low of the year is 170. Look at the last few months. Up, down, up, down. Now she's going up. Okay, look. Up, down, up, down, up. Okay, so it's going to the upside. Great. Well, let's see what it looks like at 200. So let's get rid of that. Let's go this down to covered call right there. Let's do the 200 right there. And one contract. Now the reason, I forget who said that. Someone asked me the numbers. Yeah, Mr. Nice Guy, I get that. 50 contract is $1,275, but you had to invest $50,000. It's still 2.48%. It's not numbers. Not everybody has 50 grand to throw into one trade. So I'm always doing the percentages because you can understand 1%, and if you have enough to buy, 10 contracts, great, get 10. Well, 10 times whatever 1% is what you're going to get. All right, so let's take a look at Apple because somebody thinks Apple doesn't look good. So we are going to do one contract on Apple right there at the market. There we go. And here it is. Damn it, I hit the wrong button. Hey, it happens. One contract. There we go. Confirm and send. There we go. Here we go, right here. Buy one covered call, Apple 100, that's the weeklies. 6 June 25, that's this coming Friday. The $200 call option against the Apple stock at the market to open. Now, 409 is the profit. 20 grand is about what you're putting into it. So let's see what the math looks like. 409 divided by 19,591 comes to a grand total of 2%. So I'm not thinking 2% is bad because here's the thing. 2% every single week means you can double your money by the end of the year. Because 2% every week is over 104%. Simple interest. Compounded, it's a little more. But still. How often do you hit the wrong button? About 3 times a year. But the funny thing is, if you hit the wrong button, Mr. Nice Guy, if you're quick enough, you can pick up the phone, call your broker, say, hey, I hit the wrong button, can you fix it? If you call fast enough, within 3 to 5 minutes, they will fix it for you. After 5 minutes, they're not going to do anything. But you have to be quick if you make a mistake. And people do make mistakes. As a matter of fact, most newbies mistake that they make is hitting the wrong button. All right, let's keep on doing this. Joe Berman, how are you doing today? What's website or software? Okay, random. Eventually, you will have to call them and either sign up with them or figure out something. I love Thinkorswim. I do. Lamar, what's happening, Lamar? Okay, what do we have? Pocket option. Mark James II. I have no idea what a pocket option is. Sorry. Okay, so Scott wants to take a look at Riley. Wait, I got to write Apple down. Anytime I get anything over 2%, I write it down. 2.0, yeah, 2%. All right. Scott wants to take a look at Riley. Back here, and Riley, R-I-L-Y. Now, I do have me some Riley. Okay, but look what it's done for the past couple of months. Up, down, up, down, up, down. Okay? Not quite sure what you want to see. But look at your highs. Look at the last 30 days. Last 30 days would be right there. Here's your last 30 days. Down, up, down, up, down. in a current downtrend at the moment for Riley. Now, Riot is usually pretty much the same as Riley. R-I-O-T, Riot. There we go. Yeah, Riot's going to be a big fat no. Look at this. Here's your bottom, here's your top. It's in a downturn. Now, we will keep our eye on Riot until she finds a new bottom to turn around. UAL, Joe wants to take a look at United Airlines. Interesting. See that? High, low is. Look at the motion. Down, up, down, up. Okay, it's in an upward trend. Great. The current price, 79.44. The 79, okay, the 80s are going for 186. That's more than 2%. Well, let's go back to the chart. Is it the right time to jump into UAL? All right, a year ago, we're at 53. We bottomed out at the beginning of August at 37. Topped out in the end of January at 116. Well, look at the last bounce right here. The beginning of April. Shoots up, pulls back, back up again. Well, that's definitely your high. Look at your last 30 days. Okay? Here's your last 30 days. 30-day bottom, 30-day top, retraced, bouncing, and now it's going back up again. Well, that looks pretty damn good. So what does the 80s look like? Well, let's look at it. The 80s, covered call, the 80s right there. Okay, one contract. Now, there's a reason why I use one contract, okay? Now, one contract allows people to be able to see numbers that they can equate with a little easier. Okay, here we go. Buy one covered call of United Airlines 100s, that's the weeklies. 6 June 25, that means this option is going to expire this coming Friday at 4 p.m. 6 June 25, yep, the $80 call option against United Airlines, the stock at the market to open. 261 is your profit, 7,700 is your outlay. So let's see what that looks like. 261 divided by 77.39 gives me a grand total of 3.3. Holy shit. UAL 3.3. So the question you should be asking yourself, okay, number one is, do I like? I mean, does it make sense? Question number two should be something to the effect of, do I like United Airlines? Do I like United Airlines at 79.50? Well, that's kind of the question you need to ask yourself. And then another question. Am I willing to buy a United Airlines, hold on to it until it hits my target? Well, my target is 78. Sorry, 79. Okay? And it's offering 3.3%. Well, am I willing to do a covered call every single week until it hits my target or till the day I die? Whichever comes first. You never know. But I wrote that one down. UAL, definitely 3.3. Out of there, back to here, and back to square one. Okay, so Boogeyman wants to take a look at Nucor. N-U-E. 109. Ooh, check it out. High, low, is. Look at the motion. Down, up, down, up, down, up, down. What's going on here? I want to zoom in a little bit closer. Does it make sense the last 30 days? Well, definitely not the time to jump into Nucor, but it is time to keep our eye on it. 30 days ago, it was a 30-day high at 125. And then she drops all the way down to 106, which is the new 30-day bottom. Okay, we all know when the stock hits a bottom, it turns around eventually. Well, not yet it hasn't. But yeah, we'll be keeping our eye on this thing. I turn the fan on. We're keeping our eye on this thing. See, she comes down, hits the bottom, turns around, goes back up. That's why I want to jump into it. I'm going to write that one down, and we'll take a look at that during the week and see what it's done. All right, what else we have here? Antoine, good evening. Maybe I missed the topic for the night. Oh, Moo Cow Blue Kites. Okay, Moo Cow. What we're doing here is investing in dividend stocks for a weekly cash flow. Specifically, dividend stocks that are consistently profitable. And those are the dividend kings, the dividend aristocrats, dividend champions, dividend kings, dividend contenders. And then we're throwing Warren Buffett's list just for the fun of it, because good enough for Warren, good enough for me. That's the way I look at it. So the 5 list I just gave you gives you about 300 companies that have increased their dividends. Now, a dividend being a portion of the company's profits. If the profits keep increasing, the dividends will keep increasing. You can't increase the dividends without increasing the profits. You can't increase the profits without increasing the dividends. They go hand in hand. Okay, so if the company is consistently profitable for 2 decades, it's going to be on my watch list. My watch list. You guys can put whatever you want on your list, perfectly fine. You guys do whatever you want. But this is what I'm looking for. Companies that are consistently profitable and have weekly options. That way I can get a simple, safe, predictable, consistent 1% per week. That's my goal. And I'm sharing that with you guys. No strings attached. That's it. No strings. I'm not going to try to sell you anything. If you want to join, hey, you know how you can join. Okay, it's simple as that. It's really not that difficult. Let's play swappy changey with these because my phone is dying over here. I got to replace cords like every couple of months. I don't know why that is. All right, so what else do we have? What about Maine? Maine does not have weekly options. Sorry. Sunoco, S-U-N, doesn't that one have monthlies also? Monthlies, yeah. No. No dividends, QBTS. Yeah, I knew that one. Brian on base. Let Father Diddy baptize you. Cassie was born again in the baby oil. Lovely. Disturbing, but lovely. I wish ULTR had dividends. Okay. John Werner, how are you today? Did ExxonMobil work out last week? I didn't do ExxonMobil last week. Sorry. Brian, how are you, Brian? Coco, you should have a sign above your head that gives your trading criteria so people can see it clearly because they are not listening. Thank you, Coco. What advice do you have for beginners just happening to scroll past your page and you sound very knowledgeable? Well, I thank you kindly there, Ocean Moshi. Okay. Are you buying the stock and then selling a covered call on it for 1 week expiration, buying forward 1028, selling a covered call for 1050? Absolutely. See, you were quick here. You're new here and you got it quickly. Now, Ford is offering 2.48% for the week. That's the current numbers. Now, you do have to realize in the morning at 9:30 a.m., all these numbers are going to change. So the math stays the same. What am I buying it for? What's the closest strike price? What premium am I collecting on that strike price? Is that more than 1%? Those numbers change every 5 seconds. So you got to get in there, figure out what you're okay with, and then hit that send button. Because if you wait 5 seconds, the numbers are going to change. And you don't know if they're going to go up or they're going to go down. Okay? Pick a number, get moving. QBTS, we already looked at that one. Okay, so who asked that one? Okay, Matt, we already looked at QBTS, and it was a no. Mike, ZBCN. Mike, I've never heard of that. ZBCN. Now, if I've never heard of it, more than likely it's going to be a no. And look at that. We cannot find that stock symbol. So ZBCN doesn't exist as far as I know, not in the U.S. market. Mr. Nice Guy, Lockheed Martin. High, low, was, is. Look at this. Up, down, up, sideways. 482. Okay, well, the 488s are going for 215. Now, let me see if you understand some quick math. 488 or 482 is the current price. Okay, 1% of 4.82 is going to be $4.82. Well, they're offering $2.90. That's going to be a no just because the numbers don't fit. It's not 1%, it's 0.5%. Now, don't get me wrong, if you like LMT, good luck to you. At 0.5% a week, that's 24% a year. I don't know, are you okay with that? 26% a year, sorry. Okay, Mr. Nice Guy, we did Lockheed Martin. It was a no. We did that one, did that one, did that one. Home Depot. Now, Home Depot is a dividend king. That's a good one. Okay, high, low. Where was it? Where is it? Look at this. Up, down, 370. The 370s go for 254. No. Sorry, dude. General Electric. No. Wasn't that quick? I don't buy at the high of the year. To me, it just doesn't make sense. Now, Mr. Nice Guy, I'm coming to the conclusion. You're just throwing numbers out there. You're just throwing stuff out there, not actually watching what it is you're asking for. Did you just say you are buying the call on Apple? No, Coco, I did not say that at all. Number one, Coco, I don't buy options, I sell options. Because stock options, 80% of all stock options expire worthless. So I don't buy them. I sell them, and I'm happy that 80% of them expire worthless. Because I'd love to sell you something and then have it go to zero. Because then I can buy it back at zero. Because you can't get out of a position until you close it. Okay, so you enter into position and then you exit out of the position. You either buy it to open and sell it to close, or you sell it to open and buy it to close. But either way, you have to close out each and every position. Now, usually people buy a stock. You buy a stock to open that position, and it stays open until you sell it. So here, we buy the stock to open the position. We sell the option to open a second position. And then after 5 days, the option expires. It's either going to have some value to it or it's going to have no value to it. Me, personally, I'd like it to have no value. And then I like to do it again next week. And then do it again next week. And do it every single week. Because my goal for me is a simple, safe, predictable, consistent 1% every single week. Now, Mr. Nice Guy, General Electric does fit what I'm looking for. It's a good company. It's been around. It has weekly options, and it's profitable. However, the option premiums aren't that good. So it fits everywhere except for that one spot. That's why I look at 300 different companies. So General Electric is just one of them. If it don't fit, fine, it don't fit. Some weeks it does, and some weeks it doesn't. Oh, we got some noise in the background over here. Who is that? Marcus! Marcus Jones. Got to mute you over there. So anytime you guys over here have a question, just unmute yourself and just speak right up. All right. Who do we have? Little Master. Little Masterpiece. How are you doing? Okay, so what else do you guys have me to look at? All right. What do we have here? Okay, got that one. You ever day trade? No, I don't. Broker can bust the trade. Coco, you have to be more specific on that because I'm not quite sure what you mean by that. And I've been trading for over 20 years, and my broker never busted my trade. All right. Can you do a buy right transaction in one trade in Thinkorswim? I can't figure out how to do it. I can only buy the shares, then sell a covered call. All right, Coco, you ready? Pressure, what's happening? Coco, you ready for this? This is Thinkorswim. We're not going to do General Electric because it's too high. We're going to wait and find a new stock, and then we'll do another one. And hopefully we'll find one here soon. 54 NUE. We already looked at that one. Okay, did that one. What website software did that? Did that. Palantir. Okay, Dodge. Oh, you Dodge. Okay, you're new here. Now, when I say I only invest in companies that are consistently profitable for 2 decades, Palantir does not fit. Palantir also does not have 20 years of consistent profitability and weekly options. So Palantir is a no. Laurie, Pfizer. Love Pfizer. PFE. Oh, great. Take a look. High, low, is. Look at the motion. Down, up, down, up, down, up. Cool. 23.49 to 23.50s are going for 30 cents. Now 30 cents is over 1%. Okay, so Coco, you ready for this? We're going to do a covered call on Pfizer, so pay attention. Now, Coco, you're on YouTube. You're on YouTube with me standing in front of the screen. Okay, there's another live YouTube with just the screen, not me standing in front of it. So might want to zoom into that one, because that way you'll be able to see these numbers a little easier. Okay, so Pfizer, a year ago, was sitting at 29.20. The top of the year was the end of July, and that was 31.65. Okay, the bottom of the year is 20.91. Well, look what happened from the bottom of the year. Shoots up, pulls back, up again. We still got more space here to go. So it could keep on going, because it's only gone up 1-2 weeks. Now, we seen Ford go up 6 weeks before she turned. Pfizer, 23.50. Let's give it a whirl. Okay, Coco, you paying attention? Coco, you ready for this? Okay, so here's your Thinkorswim. Okay, we're in the trade. Okay, up here is the information on the stocks. Down here is the information on the options. Right here, where it says option chain, come over a couple of squares and it says spread single. Okay, if I change spread single, bring it down here to covered stock, all this changes. Okay, I'm still doing the 23.50, which is right here. 23.50, right there. I gotta turn my fan up a little bit, getting a little hot. So I'm going to buy that right there. Okay, one contract, so you don't scare away by the numbers at the market, and confirm and send. And this is what it should look like and what it should sound like. Buy one covered call Pfizer 100s weeklies 6 June 25. That means this trade, this part of the trade, the option part, is going to expire this coming Friday. The 23.5 call option against the stock Pfizer at the market to open to open. Now it says to open because we're doing 2 trades at once. The first trade, we're buying the stock at the market price. The second trade we're doing is we're selling a covered call at 23.50 as soon as the first one fills. So that's what it sounds like. Maximum profit, 33 bucks. What is it costing? 23.17. Let's break out the calculator, see exactly what kind of rate of return that is. Let's clear that. Profit, 33. Well, cost of the trade plus commissions and fees, $2,317. That comes to a grand total of 1.4%. Okay, so you wanted to see Pfizer? There you go, 1.4%, Laurie. I still like Ford and Apple better. For this week, anyway.
Hey, James, I've got a question.
Sure, what you got?
Hope you're having a good Sunday.
I'm having a wonderful Sunday. I didn't get to play soccer this morning because my grandson was over. And if I'm not following him, like his shadow, he gets into stuff. So I didn't get to go play soccer this morning. But I'll play next week. What do you got?
Alright, so I got Dividend. I purchased it last.
I want everybody who's watching to listen to what we're doing. Dividend Energy, DVN. Okay, wait a second. A year ago, 48, the high of the year, middle of July, 49, the bottom of the year.
So I'm in at 31.18. I sold the covered calls last week that expired this past Friday. I'm down. How do I protect
number one, you bought at 31.17, right?
Yeah.
Okay. So you already sold a covered call last week, right?
Yep.
And that one expired worthless. So basically, you're going to do the exact same thing this week. Now, I'm not telling you what to do, but if it was me, I'd sell another 31. See, the 31 this week is going for 35. That's over 1%. So you got over 1% last week. You had over 1% this week. If you end up selling it at 31 at the end of this week, why not let them take it? You got a premium this week, got a premium last week, and on Friday you're in my morning trading group. So on Friday, why don't you just roll it forward to the 31s next week, this coming Thursday or Friday? Check the numbers. If the numbers make sense, roll it into next week, because you see what we're doing here. The 30-day high's here, 38. She dropped down to 26. Okay, she shot back up to 35, dropped down to 30. Now from 35 to 30, that's a $5 drop. A $5 drop on a $35 stock is over 10, 12 to 13%, something like that. So how far is she going to drop before she turns around and goes back up again? That's why we're on every morning looking. Well, this is what it did last week. Well, you made money last week. Great. Now you still have Devon Energy, okay, and you still have it at 31. So if you do another 31, you pick up another 1%. And then what happens at the end of this week? Well, we're not going to know until the end of this week comes. That's why we look every morning. So how far down is it going to drop? Well, we don't know. It could drop tomorrow, and then Tuesday could turn around and start going back up again. That's why we look every day. And we make most of our decisions based on the numbers. Okay? You bought the stock at 31.17. Great. You sell the 31s. Wonderful. You picked up 35. Great. Well, your break even is 31.35. So until the stock hits 31.35, you don't have a risk. Because think of it this way. If you sell the 31s, somebody pays you 35 cents per share. That's for every single share you have. And then the stock just goes up. Well, as the stocks go up, we're at 30.26. In order for someone to buy it from you, just for them to break even, it's got to hit 31.35. Okay? So you're not at risk of losing your stock until it goes over 31.35. And then you have to ask yourself this question. Well, if it's at 31.35 and they're breaking even, at 31.36, their profit is only 1 penny. That doesn't even cover the commissions and fees. Then at 31.37, 31.38, well, that's commissions, fees, and taxes, and they're still not even breaking even. So ask yourself, at what point do you think it's going to be worth it for someone to buy it from you? That makes sense?
Yeah, it does. Now let me ask, on this past Friday, should I have rolled the position or letting it expire? Is that what you would have done as well?
I would have looked at the numbers. Now, on Friday, I don't remember you speaking up.
No, I wasn't there Friday.
Oh, well, see, I can't help you if you don't show up, brother. You know? Now, do you still have a job?
I do, yeah.
Okay. This is where you take a look at your boss. Say, hey, boss, man, I got to take a coffee break. You go into your car, you hit your computer, you plug it in, and you say, all right, what's going on? I don't know how you want to do it. It's your life. You got to figure out how to best invest your money that suits your situation. Now, when I was working, I did all my trades before I went to work. And then when I came home from work, I see what filled, what didn't fill. And then I redo it again the next morning. Because it only takes 5 or 10 minutes for you to take a look at your scenario. What is your money doing? Now, if you had pets like fish, dog, a cat, or even a garden, if you don't take care of it, something can happen to it. The same thing with your money. If you don't look at your money every day and try to figure out what is best for my money in my situation, who knows what's going to happen to it. That makes sense?
Does. Yeah.
All right.
Thanks
All
for
right.
reviewing that.
You're welcome. But anytime you have a question, okay, we're on live every night from now on. Okay, you're part of the morning trading group, so you're on live, so you can ask me questions at night. And in the morning, if you can't make them in the morning, come at night and ask your questions. Okay?
Yes, sir. Thank you.
You're welcome. All right, where am I? Palantir, we already did that one. Dun. Feed the Greek chef. Need 100% franked dividends so that the company has paid the tax portion for you. Nope. Company do not pay taxes for you. Because if I make money on dividends, if I have dividends coming in, I got to pay taxes on those dividends. So, not quite sure what you mean there. Harry for good. Icy. Harry, I've never heard of Icy. ICY. Come on, Harry. You've been here long enough. Okay, Low Detroit. We already looked at Devon Energy. 1% of 1,000 is 10. Yeah, Seb, you caught that one. Yeah. Yep, I think it's 10. Yep. Because 1% of 10,000 is 100. Haphazard. Still waking on those stocks that meet your criteria. Waking? I have no idea what that means. I mean, I know what waking means. Hey, I'm just waking up. Or, hey, look at the wake. Look at that boat. It's waking. Okay, anyway, there's a lot of different ones. Still haven't told me what's the stock you've been eyeing. U.S. Steel. K-View. What the heck is K-View? K-V-U-E. Oh, all right. Interesting. However, I'm not familiar with K-View, so let's go here and look at KVUE. How consistently have these increased their dividends? Okay. Okay, so unfortunately, K-View only has 2.5 years. 2023, 2024, 2025. 2.5, 2.5. Yeah, sorry, K-View. What do we have? Another 17 years to go for K-View? Sorry, dude. Oh, Pan America Silver. Uh-oh. Pan America Silver. PAAS. Let's see what Pan America Silver looks like. $19.95. Profits. Well, let's take a look. 2010, 25. 2011, 25. That's not an increase at all. Okay, 2012, 3.8, 5, 12. Okay, hold on a second. 2013, 12 and a half. 2014, 12 and a half. 2014, 12 and a half. 2015, 5. 2016, 1. I'm going to say no to PAAS because it went from 12 and a half cents a share down to 5 cents a share, then down to 1.3 cents a share. So I'm thinking to myself, that's not being profitable. Why would I put my money into that? Who came up with that one? 3A Ghost. Come on, dude. You've been here long enough. Levi Strauss. I don't think Levi Strauss actually has dividends. L-E-V-I. Levi Strauss. Okay, Levi Strauss. 20 June, 18 July, 17 October, 16 January. That's a monthly. That is a no. Who came up with Levi Strauss? Mr. Nice Guy, come on, man. You've been here long enough. You know better. Why are there too much stock stickers in each stock in the U.S. stock market? There's a lot of different companies out there. Michelle, K-View is a spinoff of Johnson & Johnson's consumer division. Does that make a difference to you? Absolutely not. They're not profitable, they're not profitable. Wooden Hornets, K104. I have no idea what that means. Tony Ice Cream. Uh-oh. Tony. Tony's new here. You know how I can tell Tony's new here? SPY. Okay, Tony, you ready for this? SPY, Tony. We're going to go all the way to 2005. Tony, you ready for this? 2005, 46, 48, 52, 67, 51. Tony. That's going backwards, dude. See? 46, 48. That's higher. 48 to 52. That's higher. That's good. 52 to 67. That's higher. However, 67 to 51, dude, that's lower. That's low. That's not profitable. That's going backwards. That's not making as much money than you did the year before. 55, 57, 79, 55, that's backwards again. That's two. Twice went backwards. 65, 71, 77, 64, that's three times it went backwards. 66, 69, 71, 56, four times. 51, five times. 50, six times. 59, 48, seven times. All right, I'm going to forget it right there. SPY, hell no. What else you're missing, Mr. Tony Ice Cream? Now, that's the historical data for the dividends. And it's not increasing every year. It's actually going up, then down, up, then down. But hold on, Tony Ice Cream. It actually gets worse. Hold on, it gets worse. Now, we're going to go from historical data, which is the historical performance that this SPY has had, and we're going to go to the summary. Now, the summary is going to give you an idea of what this year looks like. Okay, you ready? Here we go. Tony. All right, Tony, you ready? Here we go. Spiders, S&P 500 ETF, SPY, $589.39 a share. That's a share. You're going to love this, Tony. You ready? Do you see what the yield is, Tony, my friend? 1.29. 1.29, Tony. That's not for the day, it's not for the week, it's not for the month, it's not for the quarter. SPY is giving you 1.29 for the year. All 12 months, 365 days. You're putting $588 per share to get a 1.29% return. Explain to me, Tony, in a manner which I'll understand. Now, you may have a whole shitload of money where 1.29 is actually good for you. For me, it's not. I'm looking for 1% every single week. 1.29% every year? Yeah, I'd still be working. Okay? Yeah, no. No, hell no. Look at this. Year to date, YTD, year to date, daily total return, point. It's not even 1%, 0.87. How can you possibly say that is a good investment? Tony. Don't know what to tell you, dude. Let's keep on keeping on. What about AMD? Advanced Micro Devices? AMD. Let's check it out. AMD. Oh, look at this. AMD has no dividend. As a matter of fact, the last dividend AMD has paid was April 27th, 1995. That's my advice. That's my opinion on AMD. No dividends, no thank you. The last dividend AMD paid was in 1995. How is that possibly going to help me today? Iceman 2020, no dividends on AMD. Uh-oh. Eric, VFC. Ooh, VFC. VFC is actually on my list. So let's go here and put in VFC. I like that. Look at this. High, low. Where was it? Where is it? Look at the motion. Up, down, up, down. 1285, the 13s are going for 15. That's more than 1%. I like more than 1%. More than 1% means I'm making more than 50% per year. 1% every single week. Come on, this is simple math. This math goes all the way back to elementary school. 1% every single week is over 50% for the year. Okay? So, VFC. A year ago, 1398. The high of the year, 29. The low of the year, 936. Well, look what it's done since then. From the low of the year, she jumps up from 950 to 1550. That's a $6 move. Do you have any idea what a $6 move is on a $9 stock? That's over 66% increase. Well, yeah, there's going to be pullback and profit taking. Big gap down, back up, back down. It's in a downturn at the moment. I would wait. Me personally, I would wait until it finds a bottom, turns around, goes back up again. That's just me. What the hell do I know? I tell everybody, don't listen to a word I say. Do your own research. Is what I'm saying, does it make sense? Great. If it makes sense, write it down, double check it. Don't blindly listen to somebody on YouTube or TikTok or whatever. Do your own research. Look it up. VFC. Well, it's the current price. A covered call is one of the safest trading strategies there is. Okay, you buy a stock at a certain price. You sell somebody the rights to buy it from you for the exact same price you paid for it. It sounds crazy. If I'm buying it at $12.85, I'm selling it to somebody else at $13, and they're paying me 15 cents a share. Well, 15 cents a share is more than 1%. And let's say it hits 13. Well, I take that 15 cents, more than 2.2% for 1 week. Okay, so if it doesn't hit it this week, great. Well, let's do it again for next week. Get another 1% next week. 1% every single week is over 50% a year. Terribly sorry. It's simple math. As a matter of fact, this strategy I'm teaching you here was created for my 9-year-old daughter. When she was 9, she says, "Daddy, what are you doing? Can you teach me?" Well, great. For a 9-year-old, it had to be simple, safe, predictable, consistent, no way for her to lose. So to come up with a strategy like that, you need a simple, safe strategy. Well, the simplest and safest strategy that I know of is the covered call. You have to own the stock before you can write a call against it. And all I'm doing is I'm buying it at a certain price, selling it to someone else for the same price I paid for it. It's kind of like going to the grocery store doing your shopping for your neighbor, and then them giving you a tip for doing it for them. Almost the same thing. Coco, Eureka! That was the tip I needed in Thinkorswim Web. Oh, no, I don't use the web on Thinkorswim. I use the download version. Because the download, all right, with Thinkorswim, you got 3 different versions. You got the mobile version. Ugh. You got the online version. Ugh. Well, then you have the download version. It's this one. Now, I've been using this for over 20 years. I think it's awesome because they haven't changed it in 20 years. That's great. I come from a leave it alone. Okay? Christian, hello. Have an amazing night. Thank you kindly. Daryl Jones, thoughts on the S&P 500. We just looked at the spider a while ago, which is the S&P 500. SG trending Sunil Sahani. Good morning. Good morning to you. David, Macy's. Ooh, we haven't looked at Macy's yet. Macy's. Here we go. Now, I actually have some Macy's. Let's check it out. Here's the high. Here's the low. Look at the motion. Here's where it was. Here's where it is. Look at this. Sideways down, up. 1189. We're looking at the 12s. The 12s going for 19. That's more than 1.5%. Well, 1.5% is over 75% a year. If you can get 1.5% every single week. Well, fine. Let's take a look. A year ago, Macy's is right around 19. The high of the year was in the beginning of July, and that was 2053. Now, the bottom of the year was the first week of April. Okay? And that was $9.79. Look at this. Up, down, up, down, up, down. Not quite time to jump into Macy's. Now, I already own it, so it doesn't look as if it's a good place to jump in at the moment because it's in a downturn. See, down, then up, now down again. That's Macy's. Gap. David wants to take a look at the Gap. U.S. market view. Okay, thank you. Gap, G-A-P, G-A-P. No. Okay, check that out, the Gap. Bottom's here, shot up. Look at this big drop. There has to be a reason for this big drop. Now, I'm not going to jump into it this week, but I am going to keep my eye on it. Because anytime you go from 17 to 29, that's $12. $12 on a $17 stock. That's about 70-80%. That's a big jump. Yeah, there's going to be profit taking. Here's the funny thing about profit, specifically with this chart. Take a look at this. Okay, a month ago we're at $17. Then we jump up about 80%. If you did not take your profits, are you surprised that the market maker took most of it away from you? Look at this. It was at 29. The market maker dropped it down on Friday down to 22. You just lost. Yeah.
It dropped because of earnings, and I bought a put spread, and I made some good money on it.
Whoa, that's cool. But think of it this way, okay? Stock jumps up. It's at 29. There's a nice profit there, right? If you do not take that profit, you have a piece of paper. It's just, that's all it is, a piece of paper with a paragraph on it. Paragraph says, we didn't make the earnings we thought we were going to make. That's the information the market maker got. So what did he decide to do? The market maker decided to go from 28 down to 22. He took the profits away from you. If you don't take your profit, don't be surprised to get taken away. I'm glad you're doing well on that, Andrew. That was a good call. Anyway, next. So I am going to keep my eye on this. Okay, because as soon as she turns around, she might just jump right back up there again. So the Gap, we will keep an eye on it for the next week or two. Oh, moo cow. What if the stock goes down? Oh, dude. All right. See, here's the funny thing, moo cow. You're under the impression. Okay, correct me if I'm wrong. You're under the impression just because you buy a stock, it should automatically go up. It doesn't work that way. Stocks go in two directions and only two. They go up and they go down. They do not come to your house and wash your dishes. They don't take the dog for a walk. They don't rake the lawn. They don't trim the hedges. They don't even put the dishes in the dishwasher. Okay? Stocks go up. Stocks go down. That's all they do. Now, I said rule number one was simple. Never buy something you don't understand. Now, what I mean by don't understand, anytime you look at a stock and you're thinking of putting money into it, you should know what is the high of the year? What is the low of the year? What is the average movement within the year? Okay? Let's take a look here for a second. Okay. The high for the Gap this year is 30.78. The low is down to 17. Okay, that is what, a 40% drop? 40% drop. Some stocks drop 50 to 60%. I mean, there was one we were looking at the other day, Riley. Hold on a second. Okay, check this one out. Riley, $24, and the low was $265. From 24 to 260, that's a 90% drop. If you're not ready for a stock to drop when you buy it, you shouldn't be playing this game. Stocks go up, stocks go down. That's all they do. What I'm saying, I'm showing you what I do. Not I'm telling anybody what to do. I don't ever tell people what to do. I just do what I do, and I explain why I'm doing what I'm doing. So I own some Riley. Now, I bought Riley, I don't know, I think it was like 6 or 7. Okay? Down, up, down, up, down, up, down, up, down, up, down, up. Now it's going down again. You got to pick a stock and follow it. If you're looking to buy a stock and hold on to it for decades, fine. And don't do anything with it, fine. Different story. Here, I do something totally different than anyone. I've never heard of anybody investing for weekly cash flow. Never. Never heard of it. Everybody always does annual trading or daily trading. Okay, but nobody does, what I'm doing. Buy a stock, sell a covered call for weekly cash flow. Specifically, a stock goes up, it goes down. If you're buying it and it goes down, you better be ready for that. Because that's what they do. They go up, they go down. That's it. Next, what do we have next? From India, good evening, Coco. My old laptop fan goes into overdrive when I try to use Thinkorswim desktop, and it lags. Don't have the same problem with web. I need to make more money selling options to buy a new laptop. You can go buy a used laptop, or you could go to the library and use their computer. Joey V, gotta love it. I knew someone was gonna bring up Misty. Let's go check out Misty just for Joey V. Joey V wants to jump in with Misty. MSTY. Misty. Okay, so Joey, here we are on Yahoo Finance. This is not my numbers, Yahoo Finance. We're going to pull up the historical data for Misty. Yeah, you're not going to like me in a second, Joey. You're not. Trust me on that one. I've seen Misty over every single week. Someone asks me about Misty. Misty, Cody, VOO, SCHD, blah, 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 blah. Okay, so here's Misty right here. All right? Now, I'm going to look at historical prices. Joey, historical prices. That means every single day, this is recorded. The high of the day, the low of the day, the open, the close, the volume. All this is every single day. This is added to it. This is the data stream. We get all the information on the stock. So I want to change and look at just the dividends, my friend, because we are looking at dividend investing for cash flow. Okay? So let's go back and look at every single dividend that Misty has. All right, here we go. Are you ready? Oh, what happened there, Joey? April 2024. This thing's what, 14, 15 months old? You honestly think that a one-year-old company is a good place to invest your money? Think about it. Now, hold on. It actually gets worse. It does, really. Now, remember what I said about consistency of profitability? Okay, so one entry should be like, let's say hypothetically it's 3. Well, the next one should be higher than 3, right? 4, 5, 7, whatever. So I go 3, 4, 7, 11, 15, 18, 22, 30, 35, higher and higher and higher consistently, right? Because as you're in business, you should make more money this week than you did last week. You should make more money this year than you did last year. Well, let's check out Misty. Are you ready? Here we go. Here's the numbers. 412. Well, that's pretty damn good, right? 250. Hold a second. Isn't that like a 45, 50% decrease from 412 to 250? Isn't that a decrease? That's not profitable, Joey. That's going backwards. Hold on. It gets worse. 250 to 3. Well, that's good. Then from 3 back to 230. Well, that's not good. Then from 230, it goes to 190. Well, that's not good. That's lower. Then it goes to 185. Well, that's even worse. Joey, why are the numbers getting lower as time passes? Aren't they? It's a little over a year. Okay, let's keep on going. So it goes from 185 to 419. Well, that's pretty good. And then from... Hold on, Joey. We're not done yet with this one. It goes from 185 to 419. Well, that's nice. Then from 419 it goes to 440. Then it goes to 3. That's a 25% decrease. Then it goes to 220. That's another 30, 40% decrease. Then it goes to 2, a decrease. 137 a decrease, 133 a decrease. Joey, this thing decreases. It doesn't increase. How can you possibly tell me that MSTY is a good place to invest? Hold on. I think it just might get worse. It just might. I think they have halfway decent dividends. I mean, halfway decent yield. They do. Now, Joey, explain this to me. Hold on. Explain this to me in a manner I will understand. Are you ready? Here we go. The yield is 124%. Now, do you understand what 124% means? Think about it. It sounds great. But how can anybody possibly sustain giving out more money than they earn? So if I earn $1,000, I have to pay out $1,240. You can't do that, Joey. You cannot pay out more money than you receive. They call that a Ponzi scheme. If you're paying out more money than you have coming in, well, where's that money coming from? You cannot, I repeat, you cannot give out more money than you make. How can you possibly give out 124%? We've already shown the dividends are getting lower and lower and lower. Yeah, and all the dividends are all short-term capital gains. You're not making a good argument, Joey. But think about it. The company's not even 2 years old, and they're giving out more money than they have coming in. How can they possibly do that? They can't. You can't possibly give out more money than you're earning, Joey. The numbers just don't work. And it's not even 2 years old yet. The very first dividend was in April of 2024. Okay, we're in we're in June of 2025. That's 14 months. I don't buy companies unless they have 2 decades. 2 decades. Because someone, Joey, at some point is losing money here. No possible way you can get that much money. It's great, hey, take the money while it's there. Eventually it's going to dry up and disappear. All right. Where was I next? Next. Alrighty. Donnie Hill. So you are saying it's okay to sell options as long as you're making over 1%. Say, Donnie, that's not what I said. Okay, Donnie, what I said is I buy a pre-qualified dividend stock. And that is a company that is consistently profitable for at least 2 decades. 2 decades, Joey, that's 20 years. This is for me. If you want to invest in that, hey, more power to you. So I invest in quality companies that have stood the test of time, that have consistently, year after year after year, turned a profit. Those are the only places I want to put my money. Now, every week we look. This week there's 10,034 different companies. That's a lot. Thanks for that, Joey. But Joey, if you want to have a chat up in the bio, drop me your phone number. I'll give you a buzz. We'll chat. All right, what's next? My analysis, AKU, begin. Okay, wow. I can't even read that, dude. My analysis. That's all I can read. Is it LLK Trader? Okay, whatever. All right, back over to here. What do we have? 52 questions. Uh-oh. You still haven't mentioned what you've been eyeing. Yeah. Yes, I have. U.S. Steel. K-View, Riley, Macy's. Looked at all those. Yeah, Bobas. Yeah, United Airlines doesn't pay a dividend. I'm well aware of that. Somebody asked me to take a look at it. I did. Can you explain what a covered call is? Oh, Emerald Phoenix. Emerald Phoenix. A covered call. Basically, covered means, hey, don't worry about it. I got you covered. Right? Basically, you're buying his shares. You're owning something first. That makes it covered. then you're selling somebody the rights to buy it from you at a certain price by a certain date. So let me give you this example right here. This is Riley. Okay? Riley at this moment in time is at $3.05. So tomorrow morning I can buy it at $3.15. Okay? Now, if I buy it tomorrow morning at $3.15, now I know it doesn't sound like a lot, but just go with me for a second. I can sell somebody the rights through a covered call, that's what a covered call is, to buy it from me anytime before the 6th of June. See it? 6th of June, 6th of June, 5 days. I can do the 6th of June, the 13th of June, the 20th of June, the 27th of June. I can choose any one of these dates. These are the dates. These are the prices. I can sell at any price by a date and time. Okay? So, in order to do a contract, any contract whatsoever, to be legal and binding, you need 4 things. Beginning date, ending date. Consideration, that's money changing hands. And then the agreement. They also call it meeting of the minds. It means you're both agreeing on something. I bought something, I'm selling it to you. You're buying something, you're paying me money. That's the agreement, and you're paying money for that agreement. So what is that agreement? Well, at $3.15, that's what I'm buying it for. I'm selling it for $3.50. I'm picking up 5 cents. Now, 5 cents doesn't sound like a lot, but 1% of $3.15 is 3 cents. So 5 cents is more than 1.5%. Okay, it's, yeah, baby, in the house. 1.5% is more than 1%. So I'm looking for 1% every week. So if I can collect 1% every single week, that's over 50% for the year. Now, if I'm only selling an option on things I own, that means I'm covered. That's where I'm covered. And I'm selling a call option, call. You can also sell a covered put, where I take a certain amount of money, put it away, and I sell a put. That's a covered put. We're doing covered calls, though, because they're simple, they're easy, and they have very low risk to them. Jameson Gilliam, am I profitable? Disgustingly so, I would say. Jameson. Okay, think about it. I'm looking for 1% a week. It's not a huge amount. But, however, 1% a week is more than 50% per year. So if I have $100,000 and 50% a year, that's $50,000. That's a nice little chunk of change. Okay? Jameson's, do you trade futures? If no, why not? Futures don't have weekly options as far as I know. And futures, they expire. That's your answer. Futures expire. Okay? So if I want to do, let's say, hold on. Oh, ALB. Hold that thought. It's Able Mile, ALB. So futures aren't like stocks. Okay? If I buy a stock, I can buy it today, put it in a safety deposit box, in 20, 30, 40 years from now when I die, my children can open up and say, hey, look at this, we own these stocks. They'll still be available. But if I buy, let's say, a couple of contracts on sugar, corn, wheat, lumber, eggs, pork bellies, orange juice, they have an expiration date. So if I buy them, put it in my top drawer, 10, 20 years from now, they're going to be worthless. Okay? I don't do futures because they expire. That's my reasoning. Coco, do you sell in the money covered calls? Are they always at the money? Coco, they're always, always, always dependent on the numbers. I would prefer to do in the money because it's a safer trade. At the money, it's more profitable. Out of the money, it might be a little bit more profitable, but you're asking the stock to move up. So in the money. Stock doesn't have to move at all, and I'm still profitable. So it's always about the money, always about the numbers. Sorry. Mike, CVS. Oh, wait. We're looking at Abelmal first. Abelmal, high, low, is down, up, sideways. Been sideways for the past couple of weeks. Let's zoom into that. Doesn't look that good. Okay, here's our bottom. Shoots up, pulls back up, back down. 3 days to the downside. If you really like Abelmal, me personally, I would wait until we find a new bottom. Okay, here's your bottom here. Shoots up, starts to pull back. I'm waiting for it to find the bottom. Sorry, Abelmal. Brian Scott, how are you today? Wild Tanuki. Interesting name, Tanuki. Okay. Ben, NVS. I have no idea what NVS is, but we're going to take a look at Mike's first, CVS. Ooh, that looked good. Look at it. High, low, is. Sideways, down, up, 64.72 to 65 are going for 1%. All right, 1%. Let's take a look at it. A year ago, CVS is at 59.80, bottomed out at 43, and we topped out at 72. Well, look at this. Up, down, up. Well, look at all the space we have here. That's plenty of room. So, yeah, CVS looks good, but what do the numbers look like? What's the 64 look like? Okay, so let's get out of this. Let's change this to that, and let's do the 64. The 64 is right there. Now, one contract right there at the market. And here's Johnny. Here we go. Buy one covered call, CVS 100, 6 June 25. The $64 call option at the market. 107 is my profit. 62.93 is what I'm dishing out. What rate of return is that? Now, to find the rate of return, it's always the same. You take the profit, 107, you divide it by whatever your investment was. The investment here is 62.93. So let's find out. 107 divided by 62.93. 62.93, grand total of 1.7. 1.7 for CVS. CVS, 1.7. So that's 4 halfway decent ones we came up with tonight. Now, NVS, I have no idea what envious is, other than you being envious of what someone else has that you don't have. NVS. Novastar. That's a no. Who came up with that one? Ben. So, Ben, you're new here. Let me explain something, Ben, briefly. Okay, Ben, I don't buy stocks that have monthly options. 20 June, 18 July, 17 October, 16 January. Those are months of the year. That means I can trade it once a month. Now, if I'm making 1 to 2% with every option trade I do, that's 12 to 26%, 12 to 24% a month. That doesn't work for me. I like 1% every week because that's 50 to 100% per year. Now, I would prefer 50 to 100% per year over 24% per year. Brian, BEP, I have no idea what BEP is. It's a no is what it is. Okay? 20 June, 18 July, 15 October. Yeah, nope, I don't do monthlies. The numbers just don't work. Alrighty? So what else do we got? When you lose, how much do you lose? More than 1%. Brandon, gotta love it. Brandon, I hate to be the bearer of bad news. Okay? Well, I'm not really sure if it's bad news or not, but you're not gonna like hearing it. Okay? Because you want me to tell you that I lost a lot. No. I got 2 losses this year. 2 losses this year. Riley and Altria. That's it. 2 losses. Okay? So, Here's the thing. When you buy a stock, let's say I buy BEP, whatever the hell this is. It's at 24 bucks at the moment. Let's say it goes all the way down to $3. Did I lose anything? No. I only lose when I agree to take that loss. Because stocks, if you can see, okay, the high here is 29. The low here is 19. That's almost a 30% drop. Now, if I bought it at 29 and now it's down here at 23, did I lose anything? No, you don't lose and you don't win until you agree to take whatever it is. So if the stock I buy at 29, it's now at 23. If I sell it at 23, I'm making the agreement to take that loss. If I bought it at 29 and I still own it, I refuse to take that loss and I will continue holding on to it until it hits that 29 again. I don't like taking losses. I took 2 this year. That's it. Only 2 losses out of all the trades I've done. Now, you're new here, so you have no idea what I've done this year. So let's give you a little gander, all right? Now, who said that one? Brandon. Your stream is mirrored. It makes the graph and really everything on the screen all backwards. Well, Brandon, if you know a way that YouTube will allow me to invert it so everything's working fine, I'll be more than glad to do it. But at this moment in time, YouTube doesn't do that. Now, TikTok does. So everything on TikTok looks normal. All right, so anyway, here we go. Here's my website right here. What I'm going to show you is right here and right there. Okay, this is all my trades so far for 2025. Okay, this is week 22, right here, May 26th to the 30th. Now, I haven't done that yet. I usually do that on Monday or Tuesday, but that was last week. Oh, here's the week before, week 21. See, week 21. Week 20, week 19, week 18, week 17, week 16, 15, 14, all of them. Every single one of these little squares is what I traded this year. Macy's, U.S. Steel, Kohl's, Riley, Kohl's. Advanced Auto Parts, Foot Locker, Riley, Riot, Foot Locker, U.S. Steel. All my trades are there for you to see. Okay, I have 2 losses. Count how many of these trades there are. Going all the way back to January 1st. Oh, there it is right there. Week 1, quarter 1, December 30th to January 3rd. Okay, look at all these trades I made. U.S. Steel, MPW, Intel, Altria, Harley-Davidson, Intel, Riley. Out of all those trades, now this is just 1, 2, 3. That's just 3 accounts. I have 7 accounts altogether. I share 3 of them publicly for you guys to see. Out of these 3, I got 2 losses. That's it. So I'm not quite sure what it is you wanted to hear. 3 days to the upside and return over 3%. Humana. Do you sell the covered call on that stock while it's down? Yes, I do. Why wouldn't I? Your stream is mirrored. Yep. So Eric, Humana, huh? Let's take a look at Humana. H-U-M. H-U-M. Interesting. All right, let's take a gander. You ready? Here's the high, here's the low, here's where it was, here's where it is. Look at this. Up, down, up, down, up, down, up. 235 to 235, they're going for 760. That's over 2%. Well, let's take a better look at it. Okay, a year ago, Humana's at 362. Top of the year is at 406. Bottom of the year, looks like we have a double bottom at 212. back in September, and then in April, hit 212 twice. We can call that support if you like. Look at your last 30 days. Let's try that one more time. All right, here's your last 30 days for Humana. 30 days ago, we're at 260. Okay, we dropped all the way down to 215, back up to 255, back down to 220. Now we're at 233. We're definitely down, up, down. Now it's going to the upside. So you got, here's the bottom here, 1, 2, 3 days. Yeah, that's a definite signal and a half if you like Humana or whatever. So the 233s. Okay, it's at 235. The 235s are going for 760. Great. Well, let's see what it looks like. 235s right there. One contract at the market. Here we go. And here's Johnny. Buy one covered call Humana 100s. That's the weeklies. 6 June 25. That expires this coming Friday. The 235 call option against the stock at the market to open to open. Now the reason it says to open is because we're doing two trades. We're buying the stock, we're selling the option. Now I buy the stock, I own it, I can do whatever I want, and I do not have to sell it if I do not want to. The call option, the second trade, is selling somebody the rights to buy it from me at a certain price, 235, by a certain date. The 6th of June, which is this coming Friday. So they have between tomorrow morning when they pay me and Friday at 3:59 p.m. to decide whether or not they want to buy the stock from me at 235. The exact same price I just paid for it. Now, for that privilege, they are going to pay me a premium, and that's $950 per contract. Well, one contract is costing me $22,000. Well, how much is that exactly? Well, let's find out. Calculator, clear that. $950 profit, right there, see it? Maximum profit, $950. Now, for those of you guys who don't know, this screen here behind me, I like doing that. This screen behind me is live on YouTube. So you can see these little tiny numbers. You can't see them on your phone or your iPad, but you can see them. And this is being recorded. So when we're done here at 11:30, 9 minutes from now, you can go back and you can watch it on your big screen TV and look at all these little tiny numbers and see if it makes sense. So to figure out what the rate of return is, the profit, the yield, whatever you want to call it, you take the profit, $950, you divide it by what the investment is. The investment here, cost of the trade including commissions and fees, $22,550. So divided by 22,550 comes to a grand total of 4.2% for 1 week. Now, of course, that's always going to depend on a couple of things. Number one, do you like Humana? That's the big question. Well, first question is, does it make sense? Buy it for a certain price. Well, the current price right now is $235.05. That's the current price. Then I'm going to sell somebody the rights to buy it from me for almost the exact same price I just paid for it. The 235 call option. That means I'm buying it tomorrow morning when the market opens. First thing in the morning, whatever it opens at, 235. Great. Now I'm selling somebody the rights to buy it from me for the exact same price I just paid for it. What are they paying? They're paying me $950 per contract. So what if the stock goes down? So what? It's Humana. I wanted to buy it anyway. Rule number one, never buy something you don't want to own. Never buy something you don't want to own or you don't understand. So if I didn't understand Humana, I wouldn't be buying it. That's the big one. Never buy anything that you don't understand and you don't want to hold on to. All right, so we got like 7 minutes left. All right, so we're not going to look at any more stocks. We actually have 5 today. Works. Get out of that. Get out of that. Get out of that. Go back to this. Go to there. And going to spend the rest of the night answering questions. Eric. I do like Humana. Everything looked good. All right. All right, let's answer some questions before we call it a night. MVS, yeah, we already did that one. No. EL Estee Lauder. Ooh, we'll take a look at Estee Lauder tomorrow. Wow, I got all these questions. Wow, all these questions. Uh-oh. I'm way behind on these questions, aren't I? BEP right there. JB, Sony. Yeah, hell no. I've looked at Sony before. That's terrible. Okay, Brian, BEP. No, we already looked at that one. A Vibe Master, Estee Lauder. We'll have to take a look at it another day. Okay, see, Wild Tanuki. So after the option expires that week, do you sell the underlying and take the short-term gain or loss? No. I sell the next one. And see, I buy a stock and hold on to it. And every single week, I sell a covered call until it hits my target. Have you heard of ASML? Patrick? No, have not heard of that. Trailblazer, QBTS. We looked at that one earlier today. No. Allison, you made $11,000 yesterday. Of course, you do realize that doesn't mean anything to me unless you tell me what did you start out with, what was the time frame, and what was the trade. Other than that, see, if you started out with $3 billion and you made $11,000 off of $3 billion, that's not very good. Now, if you had $22,000 and you made $11,000, well, that is pretty good. So you're missing a few parts of the equation to make it sound interesting. Because if you started out with $1 billion and you only made $11,000, well, that's not very good, and not everybody has $1 billion. So you making $11,000 yesterday doesn't mean anything to me unless you have something to compare it with. Let's keep on moving. Tanner, good evening. Kit Kat, how are you? John, how are you doing? Desi, cool beans. Brooklyn, what are the tax liabilities on gains at year's end with this strategy? Okay, Brooklyn, I'm going to explain this in as few words as I possibly can. Number one, taxes are something I don't like to talk about because I'm not a tax expert. However, if you're having questions about taxes, you need to talk to a tax strategist or a tax planner. Okay? Not an accountant, not a CPA, not a bookkeeper, a tax strategist or a tax planner. Okay, Saw Rose, best dividend stock right now? Well, it depends on what you're looking for. It doesn't have weekly options. All right. Lewis, high yield stocks, 217%. I have no idea what that means, Lewis, but thank you. Mike, Verizon, love Verizon. Why do you care what the annual dividend yield is when you're planning to get 1% selling weekly covered calls? That's an awesome question. And you know what? I don't think anybody's ever asked the question in the manner in which you asked it. I don't care about the dividend yield. Me personally, I don't. I just question people who say SPY is a great investment. And then I take a look at the yield and it's 1.3. That's not a good investment for me. Same thing with QQQI. You take a look at the numbers and it doesn't really look that good. It's a lot more than just the stocks. You got to look at the numbers. What is their performance? Did we already do Mara? Yes, we already did Mara. How much money do you need to trade? How much money do you need to trade 50,000? Well, you need 50,000 in order to trade 50,000. I think you could come up with a better question there, Lewis. Starbucks, love Starbucks. Nair Slayer, what's the best stock to day trade and make big profits daily? I don't know. I'm not a day trader. Any critiques on Golden Cross, Death Cross trading strategy? Okay, Wizard, never heard of it. Sorry, I can't speak on something I've never heard of. Maticus, good evening. Secretariat. Earlier you flagged Ford over 2% this week. Perhaps me, but I didn't see that. I think Ford came in at 2.48 today, Secretariat. Austin, how do percent of float shares that are shorted affect the stock or where it's headed? Well, that's a good question. Greater TM, show me what your stocks are doing. I can tell you what my stocks are doing. They're going up. They're going up, and then they're going down. And then they go up, and then they go down. You got to ask a better question than that. How do percent of float shares that are shorted? Okay, Austin, I don't know the answer to that question. It's not something that's actually in the equations anywhere. How to sell a covered call if you already own the stock, please? Sigma, if you're trying to sell a covered call on a stock you already own, you're basically just selling a stock call option against it at a certain price that you agree with. Now, Brooklyn, I love Microsoft. I've been able to retire from Misty. Hidden Ninja, awesome. Misty's only a year and a half old. Now, El Presidente, you clearly didn't look at the stock. It's leveraged. It's a leveraged option. Okay, El Presidente, I'm not quite sure which one you're talking about, but all right. Any critiques on gold? You already did that one. In order for you to pick a stock, besides the overall performance, what else are you looking at? JB, I'm looking for two things, JB, and only two things. Are you ready? Number one, consistency of profitability. 2 decades. 2 decades, consistent profitability. Number two, weekly options. That's it. 2 criteria. 20 years of consistent profits and weekly options. That's it. Moo Cow. From your website, we never hold a stock more than 10 days, so you are getting in and out, moving on to the next stock. More than likely. Sandro, buddy, I'm in love with a girl, Japanese. Help me with advice. Learn to speak Japanese. That'd be good. Ahmad, good evening. Alex, so in short, do you traditionally decide because they're old? No. Okay, a 20-year stock is not old. It's only 20 years. Aren't all yield max based off options? Could be. I don't trade any yield max stuff. I see what the numbers look like, and they're all no. Scotty Young, Kroger, we'll take a look at it tomorrow. I'll write it down for tomorrow, top of the list. Kroger. User 9618. Hey, how are you today? Pix, what's going on? Sheila Mezick, good evening. Lonzo, why would you roll covered calls? Because it makes sense financially. Oh, Mr. M. Betts, do I do poor man's covered calls? Yes, I do. Brooklyn. That's 1 million times 1% times 52. That's 52,000. Oh, wait a minute. No, it's not. Yeah, it's 52,000. What was that? No, that's 520,000. Okay, there you go, Brooklyn. 520,000. Do you close your covered calls early? Depends on the numbers. Andrea. Hey, James, did you look at Intel yet? Nope. Can you roller a covered call? Yes, you can. Explain rolling a covered call. That's where you buy back the current option and you sell one further out. That's rolling it. Is it better, New Jersey, is it better to roll the call before it hits the strike price? It's always going to be about the numbers, New Jersey. You know that. XRP, no. OKLO, we looked at it earlier. No. My picks, BX, yes. SBucks, yes. UPS, yes. Whirlpool, no. Apache, yes. Seri, yes. Verizon, yes. Humana, yes. Everyone except for Whirlpool, because I think Whirlpool changed to monthlies. Just keep writing calls. Absolutely. Chewy. Oh, evening. Canada Cook Talk Tick. Hello, James. How are you doing? Can you share your thoughts on MDT, Medtronics? Gonna ask me tomorrow. It's past 11:30. I don't know, Ryan. Thank you for all your great info. I've been trying to understand options lately. Eager to learn. I'm here every night, and also the videos live on YouTube. There's over 1,000 of them. How many years of SUVs does Humana have? No idea. Explain, Lonzo. Ooh, excuse me. Lonzo, explain rolling a covered call. Well, first of all, rolling a covered call. A covered call, first you have to own the stock. Then a covered call, you sell the option against the stock. So to roll that option, you buy back the one you just sold and you sell another one, just rolling it into the next week. Check your numbers. Ford does not appear anywhere near 2% for this week, more like 1%. Secretariat. Oh, I love it when someone questions me. All right, Ford. Now, I'm only going to do this because Secretariat's been here for a while. Ford. All right. Secretariat. 10.38. Purchase price, $10.35. $10.35 would be the $10.50. $10.50 is going for $11. You're right, it shouldn't be. Well, let's find out. Let's get rid of this. Let's do covered call. Let's do the 10.50. Okay, you see it right there? The 10.50. Here it is right here. Confirm and send. 260, 10 G's. So let's do the 260 and the 10 G's. 260 divide 10, 2, 4, 6. Okay. 2.5. So I'm not quite understanding what your math is coming out with, Secretariat. Okay? Maximum profit, 260. Cost of trade, including commissions and fees, 10,246. 2.5. You want to see something really cool? Where are you getting the 260? The 260 right there. See it? Maximum profit, 260. It says it right there. That's where I'm getting it from. The computer's coming up with it, not me. But look at that. See? 260. Cost of trade, including commissions and fees, 10,246. But look at this. Buying power effect, 5,000. That's if I have it on margin. So hold on a second. Clear this. You take the 260, and then you buy it on margin, this number right here, okay? Buying power effect, 5,071. So let's do that. Divide 5,071. Well, look at that. It's 5.1%. The numbers are right here, Secretariat. Now, it is 11:37. You guys have a great night. We're going to call it a day. You guys over here on Zoom, catch you guys tomorrow morning. All right. Ending now. Right there. Catch you guys later tomorrow morning. And you guys here on YouTube, catch you guys tomorrow morning. And you guys here on Instagram, catch you guys tomorrow night. Righty. Hey, East meets West. By the end of the day, 146. Okay. Yeah, Secretariat, I see what you're saying. I'm agreeing with you wholeheartedly. I am. Seriously, I am. But remember, you're buying the stock at 1035. 1035. If you read the other comment. Okay, East meets West, I don't see any other comments. I see hello, and I see by the end of the day, 146. And by the way, East meets West, you never did send me a number, and I don't see on any other comments in here from you. Okay, so East meets West. I only see 3 comments from you. The first one said hello. The second one said by the end of the day, 146. I have no idea what that means. Okay, also, I said if you want to chat, send me your number, I'll give you a buzz. Okay, so that one's done. All right, so you guys, I'll catch you guys again tomorrow. It's past 10:30. I'm a little on the tired side. Long weekend. And you guys over here, have a nice night. See you again tomorrow. And you guys over here, I'll catch you guys again tomorrow. And you guys down here, I will